Excuse me, guys. Choke there when I was about to say hello. I'm Ryan Mack. Welcome back to the trading, guys. We're going to do what we do every single week, which is fundamental analysis. If you are new to my channel, sorry, just dropped my bloody pen. If you're new to the channel, basically I'm going to teach you how to read things like Forex Factory. Okay, I wouldn't say I'm going to teach you fundamentals, but if you keep watching this, you will pick up fundamentals. All right. To actually fully teach you fundamentals is a whole other, session, 2, 3, 4 hour session on its own. All right. However, in this video, you will learn how to read and understand what the numbers on Forex Factory actually mean. Okay. Sometimes, if you don't know what they mean or how to interpret them, how to understand them, and how to implement them, what will happen is you look on Forex Factory, you'll see numbers in green, and you'll just assume that because it's green, that means good, i.e. bullish, which is not often the case. Sometimes, in the very opposite, you may see numbers which are red, and you think, oh, that's red, that must mean bearish, negative, and actually, no, that's not the case. So I'm going to explain that here so you can fully understand, okay? Excuse me. If you're someone who watches my channel, every week, as I always say, I do apologize if some things are repetitive, but it will always be repetitive. Why? Because this is simply a habit. Trading is something, it becomes a daily habit, right? Of things that you do every single day, every single week. It's the same thing over and over and over again. What we're going to do is, as always, get yourself a notepad and pen. Excuse me. Write down here strong, weak, and then neutral. I know if you're new to my channel, you're going to think, well, that's not very logical. It should be strong, neutral, and weak. I understand that. There's a method behind our madness. Why we write strong, weak, and then neutral is at the end of these reviews, we're going to write down which economy strengths, i.e., pound USD is strong, Japanese yen is weak, CHF is neutral. And at the end of that, what you do is you score out the currencies / economies which are neutral, and you then pair up a strong economy with a weak economy, and that's how you trade, guys. Have you ever jumped into trading or watched other people who don't bother with fundamentals, which is what drives the market? Excuse me. Wait a second. Wait till I get a drink. Hold on. This is the same. This is actually yerba mate tea. It's just a different way of doing it. The way I done last week was a traditional way. Sometimes the traditional was a bit annoying, so I just put it in one of these coffee things. And this time I have it with ice cubes, so it's absolutely beautiful. That's better. Okay, where was I? Have you ever looked at the charts? Maybe it's been pound USD, pound yen, USD CAD, and you've looked at the charts, right? And you're like, well, look, it's going up here, but it's going down there. How do I know if I'm looking for buys or if I'm looking for sells? It's via fundamental data. That's how you know. If one economy is strong and one economy is weak, let's say the USD is a strong economy and the Canadian economy is dog shit, then if you're looking on USD CAD, you're looking for buys. Now, of course, the markets will come down, which, you may look at and say, well, that's sells. That's actually not sells. That's simply markets pulling back. What you'll find is if you look at data on platforms like this, Prime Market Terminal, where it shows you where the banks have their holdings. Do they have their holdings in USD or CAD? You will find that they're still in buys in USD, and you'll be like, well, why is USD CAD coming down then? Because what they're doing is they're not entering sales; they're simply taking profits. So they're taking all these profits on, which is bringing it down. Once it hits these areas of value, they'll smash it again, and it will start to fly. All right. If you look on the weekly, look. Small candle, large engulfing, i.e. area of value, same again, boom, comes back, retest this zone, and away it goes, right? So they just take profit, areas of value, then they lump in again and add to their positions, all right? That's how it works. Banks, etc. cannot enter positions the same way you and I, we can just enter willy-nilly. They need to bring it back down, get in at good value, rise it up, take some profits off the table. It then naturally falls back down because it's such huge amounts they're closing off, right? And blah, blah, blah. It goes on. It's exactly how institutional traders trade, guys. Look, if you think, ask yourself this question, right? Have you ever done this stupid shit? I've done it, so I'm not pointing my finger at you. I'm just trying to waken you up. Have you ever been like that? Oh, look, it's, there we go. As soon as this candle, look, wait there. Oh, look, guys, as soon as this candle, I'm going to move that out of the way, it's fucking annoying me. As soon as this candle breaks this stupid fucking line that I've drawn on my page, I'm going to enter, I'm going to enter sells because it's going to melt. And then you see that one candle break, you enter sells, and then the market does this, and it fucking flies. Yeah, it's because that's not how banks trade, guys. It's not how they trade. And if you don't believe me, maybe you don't believe me because you're making money doing this, right? And I used to make money doing this. I used to fucking make money doing this. And it's, you won't make the big consistent money over the years doing this. You make enough money to give you a couple of wins and give you confidence that drawing stupid fucking lines in your chart is actually a way to trade. But it's not a longevity way of trade. You will continue to do this for 4 or 5 years and you'll be like, I'm not actually making any significant money doing this or consistent, right? And you'll be like, why did it break and now it's flying? Yeah, because that's not how you trade. And ask yourself this, one more example if you don't believe me. If you're a banker and you've got a $5 billion account, right? Do you think that you are going to be confident enough to draw this stupid fucking line on your page and then say to yourself, right, if a candle breaks and closes below this line, which I just drew 2 seconds ago out of fucking nowhere, just joining up dots on my screen, I'm willing and confident enough to place $500 million into this market right now? Of course, the answer to that would be no, unless you're a fucking maniac, all right? Now, if you are sane, and the answer to that is no, would I drop $500 million in there just because it broke a stupid fucking line that I drew 2 seconds ago? Then the answer then becomes, the question then becomes, then why are you doing it with your $1,000 account, with your 5K account, with your 10K account, with your 100,000 funded fucking account? Whatever it may be, guys, the answer is why are you doing it? And now, hopefully, you guys are sitting watching this saying, fucking hell, this guy's just made me realize this. Maybe you've had that penny drop moment. Someone done it for me, guys. I used to be one of these motherfuckers who drew stupid fucking lines on my chart thinking, I don't need to know fundamentals. And I was fucking wrong. And somebody proved me wrong. They showed me the light, and now instead of you guys having to pay for courses for this, I want to share it with you so that you guys can learn, all right? Because I know what it's like when you're starting out in trading, you don't have much money, you keep looking at courses to try and get better, and courses are like $1,000 here, $2,000 here. I have bought courses at $5,000, which were absolutely fucking dog shit. I learned absolutely nothing. The guy was a retard. He didn't have a fucking clue what he was talking about, but his course was $5,000. I have also purchased courses at $500, and the guy was fucking out of this world, unbelievable, new as shit, and yeah, basically changed everything up for me. Okay, so don't think just because you're going to spend more money on a course that the course is actually better, right? More often than not, it's not actually the case. Okay. But yeah, here we go, guys. Let's get cracking on. So, if you're new to my channel, what I do is I cover each and every currency pair one by one, apart from Aussie, China, and NZD. Okay, this is purely because they're very closely correlated. They all do business together. So if China's doing well, then Aussie will do well. Blah blah blah. I won't get into why that is today because again, that's another fucking episode. But that's the reason why I do all three of these together. Okay, the rest of the pairs I do individually. So let's carry on. So this week, what have we had? New Zealand retail sales quarter on quarter is up. Still ship is at minus. However, it is up massively, and it's up more than expected. Right? Yes, it's at minus, but it was previously minus one. Now it's minus 0.1. So that is a good increase. Okay. Core retail sales quarter on quarter is up slightly. Yeah, not as good. It's up slightly. Trade balance. Let me just see. minus 215. Oi! Sorry, my wife's talking in the background. I tell her every video, please don't be noisy in the background. And she's quiet the whole day until I make live videos, and then she starts screaming, gets the drum kit out, smashes the fucking guitar up, and yeah. 2154. Let me just check minus, and then it's minus on 5. Yeah, so that is better. That is getting better, but it's still a deficit, right? So it is getting better. CB leading index minus 3, same. AUD CPI year on year is the same. So look, it's red, right? Pardon me. When you see red, we automatically think, oh, that must be bad news, right? It's the same as before. Look at previous. Previous was 2.1. Right now, it's 2.1. So it's not good and it's not bad. It's called sticky. We call it sticky, right? It's just staying around the same area. So why is it red? Well, Forex Fact, they've painted it red because it had been forecasted to increase to 2.5, and it hadn't. It just stayed at 2.1, okay? Construction work done quarter on quarter is up. So why is construction work? I mean, it's not a leading indicator, right? But when the numbers for construction go up, it's quite good. Sorry, guys. I live in Jakarta. The air is toxic and polluted as fuck. That's why everybody has a bad cough here. What was I going to say? Yeah, construction work. So it means if there's more construction, it means more money has been put into building, right? More money goes into the economy. So that's why it's a good thing. It's not a leading indicator, hence it's only yellow, but that's why, okay? NZD official cash rate. So New Zealand have dropped rates. Now, they've dropped it by 50 base points. If we look here, New Zealand are fourth at 425, 435, 475, 475, okay? So pound and USD are kind of neck and neck, right? So we're entering deflationary periods for NZD right now. It's seen as showing weakness to the currency right now. You're like, why is it when countries cut rates? Why is that seen as being deflationary? Why is that seen as being like negative news / weak for the economy? Because surely when countries cut their rates, it means that things are becoming less expensive for the everyday person who's at home. It means that when you're going out for, in theory, right, when you go to the cinema, it's cheaper when interest rates are down. When you go out for a meal, the final price of your meal is cheaper. When you go to the bar for a couple of pints and the nightclubs and all that, it's all cheaper. When you go and buy your grocery shopping, you get your eggs, your milk, and blah blah blah. It's all cheaper, which comes under CPI as well. But the question is, so why, if countries decrease their interest rates, why does that show on the charts as weakness, as negative for the currency? Excuse me, guys. It's because of this. When countries have a lower interest, right? For investors, it then becomes less appealing. So basically, if I'm an investor in New Zealand, as in one of these big investors that buys, hundreds of millions of bonds, is what I'm talking about, government bonds. If the interest rate decreases, that means me as an investor, I'm going to get less percentage return on my investment. I'm going to be making less money. So what happens when a country decreases their interest rates? Big investors say, well, fuck that. I don't want to make less money because they're all big greedy cats, right? The big cats. What they'll do is they will look for an economy who are offering higher interest rates, i.e. USD GBP, which is 4.75. So if I'm New Zealand were previously offering 4.75, they just cut it to 4.25. So if I was invested, hundreds of billions into the New Zealand economy, I'm now losing a fuck ton of money. So what do? I cash in, all my government bonds and blah, 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 all my New Zealand currencies, and I move them across to an economy / a country, right? Pound, GBP, UK, USD, who are offering me a higher interest rate, which is then you'll see a transfer of wealth from NZD over to things like USD, GBP, and so on. Why? Because their interest rates are higher, which means if I move my money from New Zealand to USD or GBP, I'm going to be making more money. Okay, that's how it works. And that's why if a country decreases, lowers their interest rate, that's why you look on the charts and you will see a negative move. It's like, oh my God, the currency's getting weaker. And sorry guys, that's why. So yes, that's how it works. Now, the reason why that happens as well is because you think, well, what's bonds got to do with currencies? When investors wish to buy government bonds in any country, they must purchase those bonds using that country's currency. So if I want to buy NZD bonds, if I want to invest in the NZD, i.e. buy the bonds, I need to purchase it using New Zealand dollar. So if I'm purchasing hundreds of, millions, hundreds of billions, whatever, in NZD, it means there's a massive demand for the NZD currency, which means the strength goes up, right? When I'm selling them off, there's a massive supply and no demand, which means the currency comes down, shows weakness. Okay, I'm trying not to waffle on, but it is important if you want to understand, why these cuts show weakness on the charts. Okay. Statement, blah 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 blah. Into the business conference capital. You don't have to understand all of this. It's just that the important ones. Private capital expenditure is up for AUD. Private sector credit is slightly up, so that's showing a little bit of strength. China manufacturing PMI is now up. Now, this is important. It's increased. Manufacturing PMI has increased. Non-manufacturing PMI, now look, if you look here, it was 50.2, now it's 50.0, and it's red. People that don't know how to interpret this will think, oh, that's bearish. No, it's actually bullish, okay? Anything above 50, and that's starting from 50.0 upwards, is bullish. Anything below 50, 49.9 downwards, is bearish. Now, this has jumped from 50.2 down to 50.0, so it means things have gotten a little bit weaker, yes. However, it's still bullish, okay? Very important to understand that. So if China is, showing good numbers, and it's not amazing numbers, but they're getting good, right? It's still above 50. Why is that good for AUD? Because when manufacturing is up in China, they literally do like 80%, maybe even more of the business with Australia, because Australia is just full of mines, right? So when manufacturing is up, China has to purchase what? Tin, nickel, iron, copper, steel, silver, gold, blah, blah, blah. They purchase all that from Australia. There may be a couple of countries outside of it, but predominantly, 80%, 90%, they purchase from Australia. So when China is up, that's why it pulls the AUD up with it, because they then purchase more from Australia, which makes Australia grow, right? When China's numbers are dropping and there's less manufacturing, they're ordering less product from Australian mines. Guess what happens? The Aussie dollar fucking melts, okay? So they are what's called positive correlation. When China rises, AUD rises. When China melts, AUD melts. Now, AUD and USD are what's known as negative correlation. So what does that mean? When the USD is strong, AUD will be weak. They are negatively correlated. They move in polar opposites, right? Like this. China and Oz are like this. They move positively with each other, kind of like Bitcoin and Ethereum. They always, if one goes up, the other will go up. Same idea. But USD and AUD are negatively correlated, so they move in polar opposites of each other, right? Polar opposites. Let me have a quick look. What did I have them last week? Yes, last week I had AUD week, NZD week. NZD is still weak in my opinion. You may right. So see, you have to understand the full thing with this, right? See, when I say NZD is weak, and then you look at your charts right now, and you're like, well, here's NZD USD, and it's going up. I'll show you right now. Look, you look at this. I've already had this marked, and you'll be like, oh my God, look, but How can NZD be weak? Look, it's rising, it's going up, it's showing strength against the dollar. No, it's not. No, it's not. The New Zealand economy is fucked. The USD economy is a fucking powerhouse. It's flying. So why? So I'll go back. Why is that happening, and why is that rising? Look, it's an area of value. All that's happening there is banks, etc. They are not. They're not entering buys on NZD. All they're doing is they're cashing. They're taking profits, which is bringing it back up. It will either come to here and melt, or I suspect round about here. It'll probably come back up to here. As soon as it hits this region, roughly round about here, you will then start to see the orders will come back in. As long as USD is still strong, etc., and this will just absolutely melt. Okay, so this is the trades you're either looking for. I prefer to look for this. This is the best trade right here. Boom, goes back up. Previous support, once broken, becomes the new resistance, right? Boom. And it's a great area of value. If you use the Fibonacci right now, it's probably around the 786, 618-ish. There we go. Just below the 618, which, sorry, if you do that there, because it should be that one. Small candle, large engulfing. Yeah, so it's just covering the 618. And that's exactly where we look to enter. That is it. That's your entry point, ladies and gentlemen. That is your entry. Okay? Oh, sorry, I'll go back. Can you take this trade? You know, can you it would be a counter trend trade, right? Can you take this trade from here up? Yes, you can. It's a counter trend trade, but you would just use much lower risk. So if you're trading 1% per trade, use 0.5% per trade, and don't let that trade go back below break even. You know, if it comes to break even, just get out of it and let it go. You know, don't let it go back into a loss. Okay. If you're in this kind of trade, you know, it comes down, it goes back up, you know, takes you maybe back into drawdown. You're happy to leave it at that, and you know your risk is above here, your stop loss, because you know that the overall trend is down, so that you know this is not going against you. It's just simply pulling back so they can lump in, get extra value, get more orders on the table, and then melt it down. Because banks, they can't just lump in like you and I. They have to break away, come back up, lump in again, come back down, lump in again, blah, blah, blah. They have to do that because their accounts are so big. 2 seconds to top up my tea. Yeah, apologies for this annoying cough, guys. It always drives me nuts because I live in Jakarta. I know you say, oh, why don't you move to Bali? Because Bali's fucking boring, that's why. Bali's nice for 3 days. After 3 days, you are bored shitless. There's nothing to do. NZD, so what we've got coming up for next week. Let me just jump back quickly. Sorry, I have a quick look. Come on. Yeah, NZD. So, yeah, what you're seeing now is, right, these little mild numbers on NZD showing a little bit stronger, and that is what will give you this pullback. Boom, boom, boom. But it is just a pullback, guys, all right? And then when you get here, what you'll see is, I guarantee it, make a note of what I'm saying to you right now, right? Come back and look at this NZD USD. When this market gets to here, I'm telling you, what you will find fundamentally is there will be dog shit numbers coming in for NZD, and there will be shit hot numbers coming in for USD. And the market will get to here and it will just absolutely fucking melt because of that. I'm telling you, mark up what I'm saying, come back and check it, and you'll be like, holy fuck, how did he know that? It markets cycle time and time and time again. That's how. And you can know this. I'm not fucking special. It's just, this is what happens in the markets. Let's have a quick look what we got next week. I will get through this quicker, guys. Sorry for waffling. I just like to explain it for you so that you can understand it. Buildings approvals going in, cakes. So we want to see cakes and manufacturing PMI. I don't know why it's yellow because it is quite a good indicator actually. Commodity prices year on year, yeah. Overseas trade index, yeah. Current account. So why we like to see the current account? If the current account is high, it means more people are spending money within the country. So that means it's going to stimulate the economy. It's going to be good for the economy, right? I.e. strong for the currency, okay? So that's why we like to see the current account. Why do we care about it? That's why we care about it. It's not a massive indicator, but it's good to know, right? GDP price index. Commodity prices, it's only a month on month. AUD GDP quarter on quarter, yeah, we want to see that. Cakes and services PMI again. What's the other one? Oh, yeah, sorry. We've got manufacturing PMI here and services PMI, so we want to see both of those. Services seems quite good for China, which is strange because China isn't a predominantly services country, it's predominantly manufacturing. But both are above 50, which is strong, okay? If both can remain above 50, guys, that's strong. And then potentially passes over some of that strength to AUD, okay? So you have to bear that in mind. Okay, so I am putting down NZD. Overall, the economy is still weak, guys. AUD, it is showing weakness. It's not the best. I'm keeping it in weak, as in from last week. And obviously China, we don't mark down. If we jump across to the Dixie, let me just show you this quickly before we move on. Look at that, look. So this is just the dollar index, right? And what you get is what we'll find, right? You get a couple of weeks of negative news on the USD. It will simply bring it down to these areas, either this area here or this area down here, right? I'll mark it up, hold on. Or this area down here, right? Once it then gets back down to here, you will find there is strong news again for the USD and it will start to fly. What's happening now? We are approaching December. What happens generally every single year over the month of December? USD shows weakness, right? Dum, 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 dum. Normal market retracement. January hits and we start to fly again, okay? So bear that in mind. Yes, okay, so let's now move on, right? We can finally move on. These three always take a while because I'm trying to describe three economies and explain three economies at one time, right? Now we can smash it because I'm only doing one. Canada last week corporate profits not good. CAD current account, it's getting better. Obviously, it's still minus, but it is better than before. So that means people are spending more money within the economy, which is getting better. GDP month on month is it's getting slightly better, but it's still shit, right? And it's only month on month. So let's see what we've got next week. We've got trade balance. We want to see that. Manufacturing PMI. We want to see that. OPEC meetings. That's kind of important because oil has a significant impact on the Canadian dollar. If the whole Canadian economy is like pretty shit, right? Unemployment, every blah blah blah. But you're seeing strength from the Canadian dollar. Like, well, why is the Canadian dollar flying up then? If you look at oil, you'll see that oil is flying. Okay, so oil impacts the Canadian dollar quite a lot. So if oil is doing really poorly, Canadian dollar will also do pretty poor. If oil is doing fantastic, then the Canadian dollar will do fantastic. Okay, so they're correlated, oil and Canadian dollar. Next week, we've got manufacturing PMI. I want to see that. It's anticipated to be less. Remember, if it comes down, that's still bullish. But if it breaks 50 and goes to like 49, whatever, then it becomes bearish, which is weakness, okay? Trade balance, we want to see that. IV PMI, we want to see that's pretty strong for now. Employment change, yep. And unemployment, we want to see those. So if employment is up, that's good for the economy. Why? Because it means there's more people in jobs, more people are making money. If more people are making money, what do they do with that money? They spend. Not only do they spend it on a load of shit, like $5 Starbucks that they don't need, they will be able to pay their mortgages. They'll be able to pay their credit card bills. They'll be able to pay their financed cars. They'll be able to fuel their car, blah, blah, blah. All these roll-on effects, right? Whereas if they don't have jobs, they can't pay for all of these things, which falls into deficits, okay? So that's why employment should be high. That's positive for the currency, and unemployment should be low. Okay, if it's vice versa, then of course that's not good. So I'm keeping CAD at weak. Oh, sorry, I've already done next week. Yeah, so I'm keeping CAD at weak. Okay, so far we've got weak NZD, AUD, and Canadian dollar. Moving on very quickly. CHF, economic expectations, not good. GDP, quarter, not good. But it's decreased. However, very important to note, it came in as forecasted. They already expected it. Means it was already priced in because they already, it's not going to be a good month, because um, every year things move in cycles, right? It's like this. Not every month, every year is going to be good, 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 bad, bad, bad. Things move in cycles, right? It's like this. If you own a bar, right? Is your bar mobbed every single day of the week? No, it's not. Monday, you get a couple of clients, customers. Tuesday, Wednesday, Thursday night, you get a bit more. Friday night, you're absolutely rammed. Saturday night, you're absolutely rammed. Sunday lunchtime, you're all right. You've got a couple of people with a hangover coming in for a steak pie and a beer, to get rid of the hangover. And then Monday, it goes back to being shit. It's a cycle, right? Of loads of clients, no clients, blah blah blah. It's exactly the same in the markets. Each day, week, and month, it runs in cycles. Okay. So when they see that this is anticipated, they already know, we're coming up to Christmas. This is predominantly not a good month for us, so they anticipate it. Economic barrier, chairman speaks. Okay, CHF is always pretty shit. CHF, I always just tend to mark it as neutral, right? Because it's never really weak and it's never really strong. However, you just need to understand in your mind that CHF, of course, will be strong when compared to a really shit currency / economy like New Zealand, like Japan right now, okay? Like AUD. So I'm going to put it in. It's because I know in my mind, I always place it in neutral, but I know in my mind, if you put CHF against pound, it's going to be weak, for now. If you put CHF against Japanese yen, it's going to be strong, right? Retail sales year on year, we want to see that. Manufacturing PMI, so this is always below 50, right? Because, Switzerland is not really a manufacturing country. They make Rolexes and stuff, but that's about it, right? It's more of a services providing country because everybody does Swiss banking, right? Swiss bank accounts, you always hear about it. So that means they're providing services, right? So it's a services country. We expect manufacturing to be below 50 and we expect services to be above 50. Unemployment rate, OPEC, blah, blah, blah. Okay. So CHF neutral. Euro, we've only got a couple more to do, guys, and then we can crack on. Let's see what we had. Euro's pretty dog shit. Poor. Poor. Flash. Spain. Flash services CPI that's up. That's a positive, but it's Spain, right? Spain and Italy don't have enough, volume of people, infrastructure, blah, 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 to really push the Euro market. The ones that do is France and Germany, okay? So although we do take this into account, we don't overly care about it. The ones we care about are France and Germany, okay? Private loans is increased slightly. Money supply year on year is increased slightly, so that's positives. Import prices month on month. Okay, so when it's only month on month, it just gives you the initial effect. We really want to see quarter on quarter, year on year, right? French consumer spending is massively down. Final private payrolls is up slightly, but shit. French prelim CPI month on month is down. French GDP is the same, hasn't moved. German unemployment change, 7K, so that's very good. A lot of people have got jobs compared to the last one. Core CPI flash estimate year on year is the same, sticky. Again, don't be fooled because it's red thinking it's negative. They just thought it would be higher and it came in the same, okay? So it's sticky. CPI flash estimate year on year is up. Italian prelim is same. Yeah, so the euro's pretty shit right now. I'm putting it as weakness again. I honestly don't like the euro right now. It's giving a lot of not good numbers. The Eurozone is struggling, guys. We've got a lot of news next week for Euro. We've got PMI, unemployment, services PMI, manufacturing PMI. So we've got a lot of news next week that we want to see for the Euro. Okay, so for now, Euro is also weak. Moving on. Pound. BSE Shop Index, not good. CBI realised sales, not good. M4 money supply, month on month, not good. Mortgage approvals, good. Net lending to individuals is up, so that's good. Net lending is up. Yeah. It's still, this is negative news, but it's still not quite enough to make the pound weak as yet, guys, okay? We'd need to see far more numbers. So look, this week coming up, we have got final manufacturing PMI. Now, the UK is not predominantly a manufacturing country. Yes, if it's above 50, we take it into account. If it's below 50, we do consider that, of course. But it's predominantly a services country, okay? So what that means is we always expect manufacturing to be below 50 because we're not a manufacturing country, and we expect services to be up. So this will be, we want to see this news this week coming to kind of better place the pound. We're either going to keep it in strong or we're going to move out of strong. But so far, it remains as strong for me because look, look at the last numbers: 48.6, which is not good, right? But they are anticipating an increase. It was the last one was 50, so that's bullish. 54.3, bullish. They're anticipating a slight decrease. However, it's still above 50, right? So that's bullish. So pound for me is still strong for now, guys. But let's see what we get, right, next week. Japan. SPPI year on year is up slightly. Bank of Japan core CPI year on year is down. Shit. Tokyo core CPI is up slightly, which is obviously good. Unemployment rate is up, which is not good. Prelim industrial production is up. Again, don't be fooled that it's red. They anticipated it to be 3.8, coming at 3, which is up from 1.6. Okay, so that's good. Retail sales year on year is up massively. Again, don't be fooled that it's red, thinking, that must mean bearish. They just forecast it to be 2.1 and it came in less at 1.6. But if you look at previously, it was only 0.7. And now it's grown from 0.7 to 1.6, which is bullish, okay? 3.64, okay. Housing is down. So we're seeing this slight bullishness. It's very weak, mild news, okay? But this is what happens, right? Like I'm saying to you, look, when you get to these points, you will find that there will be positive news for news. Sorry, it was Japan. What am I talking about? Sorry, talking about my arse. Hold on. Here we go. Look. So now, when we get to these points, here it is here. I'm going to draw up. Small candle, large engulfing, once broken, becomes the new previous support. Once broken, becomes a new resistance. Boom. When it gets to these key points, I won't explain these key points because that's another video on its own. You will get positive news, right, for the NZD and negative news for USD. And it's the same. Look, when USD hits these zones, it has to pull back. It can't just be good forever, right? So what you will find is fundamental news will come in, worse, a little bit poor for the USD to bring it down to these other zones, either down here or down here. Then it will get good again, and then it will start flying. It's a cycle, guys. It just constantly comes in. And if you don't believe me, I don't want you to believe me. I want you to backtest it. Backtest my theory, right? It's not the theory. It's how it fucking works. But for you watching this, you will think this is simply this guy's theory, right? Backtest it. Backtest it for the next 6 months and then come back and tell me that I'm wrong. Excuse me. So Japanese yen, it's still, for now, it's still weak. We are seeing some strength. We are seeing some strength. I'm going to shift it across. Still weak. It's still shit. We need to see. I'll put it in neutral for now. I'm going to give it the benefit of the doubt just now, right? And put it in neutral. Let's see what news we've got next week. So I've moved it from weak to neutral, okay? Now, another important thing to remember here, guys. You might be like, why is, if the Japanese economy shit, why is, US USD GPY melting? Why is pound yen melting? Euro yen melting? Blah blah blah. It's nothing to do with the economies. That is because the Bank of Japan are intervening. They're literally, if you look at any news feeds, Bank of Japan are intervening all the time. Right, we're going to pump this into the economy. We're going to pump in 800 billion yen in bonds into the economy. We're going to increase the average salaries. But they're doing all this stuff to intervene, right? And that's why you're seeing, even though the economy's shit, they're doing all this stuff to push and boost the economy. That's where you're seeing this kind of false strength. It's to try and give it genuine strength later on and try and build it up and get the economy running. Okay, that's why that's happening. Japanese yen, capital spending, okay, manufacturing, we want to see that. We like to see manufacturing up because Japan is a manufacturing country, okay? Monetary base year on year, 10-year bond, OPEC, average cash earnings. Want to see that? Yeah, average cash earnings should be going up. Yeah, look, see, because they're already talking about they want to increase the average earnings. Okay, so they're talking about it, and now they're potentially going to do it. Household spending, they want to see that up. What they're forecasting to be down, leading indicators, blah blah blah. Okay, yeah, Japanese yen is kind of in this limbo for me between weak and neutral. The economy is still weak. They're trying to be good, right? They're trying to build it up. But it's not that the economy is good, it's that the government, i.e. the Bank of Japan, are trying to stimulate it and get it good. It's like when your motorbike's not working, right? You're like, come on. And instead of just using the little electric button, you're now using the fucking kickstand. You're like, come on, start, you fucker. And you're like smashing your bike kickstand, trying to get the thing to go. And eventually the bike turns on and you're like, thank God. And you start revving it and then you can go, right? That's essentially what the Bank of Japan are trying to do at the economy right now. You know, they've been using the automated start for ages. Nothing's happening. Nothing's grown. Now they're trying to use the fucking kickstart to get the economy up and running. Okay? I hope that was a good enough example. Let's see. Now, okay, we're on the last one, guys, right? Finally. Guys, I know this takes time. I know this can take up an hour of your time. This is what you need to do to genuinely trade, right? If you honestly want to learn trading and you're not someone, if you're a scalper, you just need to learn price action. You don't have to do this if you're a scalper, but statistically, you just don't make money long term. Yes, of course, like my business partner is a fantastic scalper. He makes fantastic money. Raja Banks makes fantastic money scalping. You do get the odd ones that make a very good living from scalping, but statistically, if you took every single scalper in the world and you looked at the statistics, very, very few of them actually make consistent money, okay? Of course, you will get the ones who do, like I've just mentioned, but statistically, it doesn't fucking work. That's why banks don't fucking scalp, because it just doesn't work statistically, right, for the long term. And to make any money, you need to enter your trades at higher risk, 2, 3, 4, 5% right away to catch a tiny bit of the market. If you trade, with small risk, 1/4%, 0.5%, you ain't gonna make any fucking money scalping unless your account is, millions of dollars. So there's another disadvantage. Final manufacturing PMI. Yes. So, sorry, I need to go to last week, don't I? So last week, okay, not good. Good. Same. Good. Not good. Same. Sticky. Unemployment claims. Good. It's a good labour market. Not good. It's less. Durable goods ordered off a month is up. That's an increase. Don't be fooled. It was -7. Now it's 2. 0.2. Prelim durable goods index is up. Good trade balance is up. Film hoses inventories is up. Yeah, it's up. Yeah. Chicago PMI is down slightly. Core PCE index month on month is the same. Pending home sales it's down, but much higher than forecast, which is a positive. Okay. Personal income of a month has increased. Personal spending is down. However, it came in as expected, right? So that doesn't really have an effect. Crude inventories minus 1.8, which means the demand has slightly increased over supply. But so there's many rigs, Kazakhstan, Uzbekistan, Oman, blah blah blah. There are loads of oil companies now have halted operations on the rigs because they need the price to go up. Whenever whenever oil is below $75 per barrel, oil companies are instantly losing money. Okay, it costs them essentially $75 to get a barrel of oil out the ground, right? So when oil is below $75, they're instantly losing money. So what they'll do is they'll shut down production until the price goes back up. Okay, they don't want to keep getting it out the ground to then store it and sell it later because it costs a lot of money to store oil. You can't just keep it stored there. You have to keep it churning, so that it doesn't all get mixed up and blah, blah, blah. So it costs a lot of money to store oil in the correct facilities. So that's why they don't just keep producing and putting it into storage, okay? So yeah, USD is still strong, guys. We've seen a couple of numbers a little bit wishy-washy, but USD is still fucking strong. Next week, we've got a lot of news. We've got PMI. We want to see all these PMIs on Monday. We really want to see them above 50. Jolts is a big week. Oh, maybe next week's. Yes, it is. It's non-farm payroll. Okay. Non-farm payroll week is always a choppy week, right? So always just be careful when you're trading USD. That entire week, is a little bit choppy. Sometimes you can find that there's not a lot of volume in USD pairs this entire week because everyone's just really waiting for the Friday, right? For the NFP. Jolts job openings, ADP non-farm payroll change. ISM services PMI, crude oil, unemployment claims, yet want to see that. Average earnings, yet we want to see that. Non-farm payroll change, we want to see that. Unemployment rate, yep. Yeah, so there's a lot of news next week. For me personally, USD is still strong. It's a massive powerhouse right now. If you look at the bonds, and you look at the indices, the US 500, the 100, blah blah blah, they're all flying, right? They're all flying. So that is strength. So we need to see this next week to see what we've got. But yeah, look, numbers still above 50. Predominantly, we've got a couple of lower ones, but predominantly 50, 50, 50, 50, These are all very, very strong, guys. So USD is strong. Let's see what numbers we get this week. So, summarize, strong GBP, USD, weak NZD, AUD, CAD, Euro, neutral CHF, Japanese yen. Although, in my mind, Japanese yen is potentially still weak, okay? So, what do you do with that? You then know right away what you're looking to do is I'm going to write down buys and sells. Now, it doesn't mean you just jump into them, right? So, you want to be trading. You need the divergence, right, to give you the trend. You either get a downtrend, an uptrend, or you get a range, right? If pound is strong and USD is strong, that's when you get the range. If both of them were weak, that's when you get the range. If you trade a neutral with a neutral, you get a range. If you trade a neutral with a weak, you'll get a trend, but it'll be like a shitty little trend like this, where you get the big divergence and you get the melts where you can scale in, week after week after week, is when you trade a strong economy with a weak economy, depending on which way it is. It's either going to continuously go up or continuously go down. It's giving me these big moves, boom, 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 and you're like, wow, why is that? It's because of the divergence in between both economies, okay? So what you can do now is to determine which trade you're going to be looking at. Your GBP, USD strong, and weak NZD, AUD, CAD, and Euro. Okay, you could put GPY if you want in there. Now, what you're going to do is jump across, and in your mind, doesn't mean you're going to take all these, but you're going to write them down, right? So, buys, you are looking at GBP, NZD, GBP, AUD, GBP CAD. Pound Euro, I wouldn't bother putting it in because it's always a really shit pair. It's one of those pairs that when you enter it, you can be in it for weeks and you've made, fucking $20. It's just really shit. So I don't even bother trading it. USD. Sorry, I'm talking shit. USD CAD. Now, I'm not going to put USD Japanese yen in there just now because we are going to see intervention. So, like, you could put under buys USD Japanese yen. Yes, you could. However, because of the Bank of Japan are actively talking about what do you call it? Intervention, and you can see, look, the dollar is rejecting on this main area. It's probably going to come down to around here, right? Around here, and then it'll come and go. Worst case scenario, it'll come down to here and then retest and we go, okay? Like this. Boom, 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 or boom, boom, boom. All right. So now that this is played out, I'm going to remove that. Now that this hasn't played out, I'm going to remove it. Okay. That's what we're looking for next. If we look on the 4 hour, you probably see there's a candle here, like the one that I'm looking for. Let's just have a look. Why is that such a massive difference? And there we go. We actually have it there. Small, right here. Small candle, large engulfing, bang, away we go. All right. Now, if you go on the 8 or the 12, let's see. Just out of curiosity now, to be honest. There you go. Small candle, large engulfing, boom, boom, boom. All right. Previous resistance, once broken, becomes the new support. Bang, bang. Okay. Come on. Okay, there we go. Previous resistance, once broken, becomes the new support. Now, sells. What have we got? NZD USD. I'm going to explain this to you in a minute, right? Because if we look at NZD USD right now, it's buys, right? That's not the real move though. Okay, that's the counter trend trade. When I'm writing down here saying NZD USD, I'm only talking about the trend. Okay, I ignore counter trend trades because they can whip back on you anytime. If you're in I'll give you an example with pound CAD right now. If you're in a trend trade, right, you're in line with the trend and it pulls back on you, the probability is still that it's just a mild pullback and it's going to absolutely melt, okay? If you're in a counter trend trade, going against the trend, like, look, yes, if we look at the 4 hour candle yesterday, look, you look at this, rejecting, look, this is rejecting here on the 200 EMA. On the 4 hour time frame, how many people entered that saying, oh, look, it fucking rejected here? How many people entered that? We actually entered one yesterday, but we closed it out, as it got down here and it started pulling back, we closed it out, but we actually entered this. But it was just an initial, in and out. It was highlighted that it was not a trend trade. This right here, look, I marked this up. If you watched my videos from, I think it was a week ago. Yeah, about a week ago, look. 1, 2, 3, 4, 5, 6. Yeah, it would have been a week ago. Go and watch my video from last week. Skip through it, and you will see that we already had these marked up, right? Boom. And there was another one we had marked up. Was it GBP AUD? Yep, look, GBP AUD. Small candle, large engulfing, area of value. Boom, boom. We had it marked up. I actually never took these two trades because they played out. They came to about here when I was already in bed, okay? So I just missed them, and that's always going to happen to you. But look, if you watched my video last week, or you can jump back and watch it, you will see we painted this out, and it happened, okay? GBP AUD, GBP CAD, look, boom, boom, away it goes. Sometimes you get it just tipping it, sometimes you get it in the middle, sometimes you get it coming a little bit overextended, right? All of them are the same thing. It all works. Look, that was where my... these dots are where my bloody alert was, look, but that's the trade, right? That's the trade. That's the trend trade that you're looking for, okay? CGBP USD. Oh, look, another. You know what I mean? It's unreal. Came down, tipped it here, bang, and away it goes. What you may find is this will come up and retest this zone here. And if pound comes in weak again next week and USD comes in super strong, maybe not this week, but the week after, you will then start to see this start to melt down. Okay, but they are both strong economies, and therefore I would not take this trade. Even although this is played out right, it's playing out from areas of value. I wouldn't take this trade, okay, because it's a strong economy against a strong. So you're just going to get this type of bullshit range. This look. Yes, it's moving down. Yes, it's moving up. But overall, it's a range, right? It's not. It's not a trend. The trend is what we want. Okay. So what else have we got? NZD USD. Let's have a look at that and show you. Now, NZD USD. Yes, we've got it down as sells. Okay, and we marked this up last week. The real move is sells. Now, if you look at it now, you don't want to be saying, well, Ryan said it's a sell. I'm just going to enter a sell now. That would be fucking stupid, right? You want to be looking at worst case, you want to be looking to sell it from here if it rejects, right? At best case, for a really good trade, you want it to come back up and retest this zone here. I've already got my alert set, okay? You want it to come back up and retest this zone here and then melt. Can you take the counter trade from here potentially up to here or here? Yes, you could. You could absolutely take it. Look, it's worked out every time. I just don't do it because I trend trade, because I like to increase my probabilities the highest they can possibly be. When you counter trend trade, there is a small possibility it's going to come in, but a higher probability that it can reject at any point. Why? Because the primary currency here is the weakest economy. The strongest currency is the secondary one. So it has a higher probability of going against you, not going in your favor, okay? Why would I take that trade when I can just simply fucking wait for it to hit here and I can take the best possible, highest probabilities, lesser risk trades? Just fucking wait. Most traders can't wait, and that's how they lose fucking money, okay? You want to be taking this trade. This is a trade you want. Or, worst case, this, but it's pretty shit because it's not good value. That's why it's shit. But it could play out at that and then just come here, melt and go. Okay? This is your best trade up here. So I wanted to explain that, even though I'm putting NZD USD it sells and currently it's rising, I just don't want you to go away and be like, oh, he said that sells. He's full of shit. It's clearly going up. I know it's going up. I'm also telling you it's going to go up, but I'm telling you the real move is the sell. Okay, this is just a pullback. All markets pull back to areas of value. There's no way banks will enter here because there's no value for them. They want to enter where they can get the biggest bang for their buck, the most money back, the most return back for their money. Where is that? It's right here, or it's right here. Areas of value. Okay. Moving on. NZD USD. What else are we looking for sales? What else we got? NZD kit not weak. NZD CHF. Yeah, let me see CHF. Let's have a look. Yeah, shit. I'm not even touching that. It's totally dog shit. It would be sales, but you'd really be looking. Yeah, there we go. I've already done it. This is your sell. Look, so it's already kicked in once. You probably want to see it kick in a second time. But look, that's from the last time where I done it and it kicked in, guys. Here's the area of value to buy from. Boom, 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 boom. You see that? Can you buy from here? Yes, you can, because it's value to buy from. But it's a dog shit trade, right? It's a trade that will most definitely go against you, or it has a higher probability of going against you. You want to wait for this one here. Boom, yeah. Come up. You could probably change that to here now. There we go. Bang, bang. So your entry is here, okay? Bang on the rejection of 200 EMA, and away you go. But I mean, it's still pretty shit. I wouldn't touch it. I'm not even writing it down. It's that shit of a trade. I'm not even writing it down, okay? What else we got? I don't even trade, and I don't even trade pound NZD. I don't think, because it's the spreads are really high and it's pretty shit. It would be buys, but yeah, we really need it to get any value. We really need it to come back down here, right? And you can see, look, we're miles away from that, so I'm not even marking it down. Pound AUD. Let's have a look. That would be buys. Yeah, look. So it's already happened. You see that? You see how it works, and how the fundamentals work. Where a strong economy against the weak economy. I now know pound AUD is buys. You come across what fucking happened, buys. Do you see what I'm saying? I mean, we've missed that. We need to wait for the pullback, but look at this. Previous area of support. Sorry, I'm going to move that. Small candle, large engulfing, once broken, right? So when you first mark this up, what are you looking for? Right there, sorry. When you first mark this small candle up, you're looking for it to potentially come here, reject, and retest and reject, right? When that doesn't happen, and this area, the small candle, the large engulfing, gets broken, what will happen is this. Look, small candle, large engulfing. I'm telling you, you watch what I'm going to show you right fucking now. You'll think I've got a crystal ball, right? Look, it's going to do this. Bang, 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 bang. Okay? Our next entry is here. That's it. Anything else this market does outside of this, we do not give a shit. Now, if the AUD is absolutely dog shit and it fucking melts, and the pound is super strong, what you may get is you may even get a break of this. So it will push up beyond this, come back, retest, reject, go bang, and then this part here becomes your entry if it doesn't give you this pullback, right? You're only entering if it gives you this pullback to this zone here. If it does not give you the pullback to this zone here, you're not entering the market. You're simply watching what it does. If it breaks above here, watching, ignore. Don't try and chase the trade up because it will then pull back, retest this zone, and away it goes. All right. I'm going to delete this just because it's quite messy, right? I get shit all over my screen. But you get the point now, right? This is already played out, so I'm now going to close this. Look, these were the two potential areas. You can see the first one hit. Fucking fantastic, guys. I'm telling you. Fantastic. At some point, it will come back down here. It will even come back down here at some point, okay? Just not yet. So pound AUD is buys. We just need to wait for this retest before we can enter it. We cannot enter it just now, all right? What else we got? Pound CAD. Look, pound CAD done it as well. Boom, boom. Same idea. What we need to look. Wait, just get rid of this. It's already broke. What we really need. So look, previous area here. Once broken. Same fucking drills, guys. Boom, boom, boom. Enter. Bang. Ah, shit. Fuck's sake. Right there. Bish, bash, bosh, boom. Right. That's your entry. That's your entry. Look at how well this panned out. That is your freaking entry. Okay. GJ, I'm going to ignore that for now. I'm ignoring all yen pairs for now, guys, because the Bank of Japan is intervening, okay? Pound USD, I'm ignoring, even though it came in. Let's have a look. Yeah, it came in. I'm ignoring it, though, because both economies are strong, right? I only marked it up so that, for education purposes, so that the guys can see it playing out. But look, it's fucking played out again. Look. These areas fucking play out, guys. Look, here it's here. Once broken, look, here's the area here, right? Breaks above, retests, rejects that zone, goes, comes down, breaks below, comes back, retests that zone, and then fucking drops. Time and time and time again. Here it is. Boom. Small candle, large engulfing. Breaks above, retests that zone, boom, away it goes. It's mental. Time and time and time again. Small candle, large engulfing, right? Look, small candle, large engulfing. You draw this up, you mark it across. What you're looking to see is come up here, retest and reject. When you do not get that and it breaks above, what happens? It will come back. This previous resistance becomes the new support. Boom, boom. Away it goes. Bang, bang, bang. Right? Every time. I'm telling you guys. Every freaking time. Any other pairs just before we wrap up here? AUD, let's have a look. AUD CAD, no. AUD CHF, no. AUD JPY, no. AUD USD. Yep, we could do that. AUD USD. So let me think. That is sells. So look, I've already marked it up. We are looking for sells here. Okay. Yes, it's going to come up. We could get a really bad. It could just come here and reject, guys. Could you take it? Yes, you could. Why is it a bad trade if you enter it here for the sell? Because there's no actual value to sell from here, right? One, there's no actual value to sell from. Two, China is picking up. So when China's picking up, what's that going to do? That's going to give strength to the AUD, right? So that means it's potentially going to come here and then push up further, right? So we have to bear that in mind. You don't really want to be entering here. If the market, in this type of situation, right, if the market comes to here, the zone that I've already put up, and it melts, that's the type of trade that even though I've marked it up, I just walk away from it. I don't take it because there's no real value for me, okay? The value trade for me, which I'm just going to clear this up because I'm not even going to mark this. Shit, it's that bad. The value trade for me is this, is here. When it comes back up, boom, there we go. When it goes back up here, boom, boom, boom. This is the value trade for me, okay? I'll move this down. That's it. That's what I want to be entering. Minimum, right? Minimum. That's what I want to be entering, okay? Previous support, once broken, becomes the new resistance, boom, breaks away, comes back up, retest, reject, melts. This is my entry. I'm just going to put... there we go. So, sells is AUD. What else we got? Let's just have a quick look, guys. Yeah, I've marked them. Buys. NZD, CAD, AUD. Right, I've marked them up. USD, CAD, marked as buys. Turn that off. Off. NZD, USD sells. NZD, CAD. Both are weak, so I'm going to turn that off. Euro Japanese yen, I'm going to turn that off. Euro CAD, no, I'm going to turn that because it's weak. I don't want it. Euro AUD, both are weak. I don't want it. I'm going to turn it off. Euro NZD, both are weak. I'm going to turn it off. AUD CHF, let me just see that. Both are pretty shit. I don't want that, I'm pretty sure. I think I only had it turned on for educational purposes. I'm going to wrap up soon, guys. I'm sorry. Yeah, turn it off. I'm not interested. AUD CAD, both are weak, so I'm not interested. Yeah, looks dog shit. Not interested. Turning that off. Bullshit. You get some, because China's, so what you'll find, right, you may get news that pulls this down to here, right? And then China's news will come in very strong, which will then give strength to the AUD. The USD showing weakness during this period of come on, the Dixie coming down to here, that's showing weakness, right? So what you will then find is, where the hell was it? What pair was on there? Fucking hell. Yeah, there we go. So USD weakness does what? Gives strength to the AUD, right? So you'll find that this kind of pulls down. Initially for the pullback, it may just take off from here, in which case you want to see the break above. You don't want to be entering here, right? You want to really see this come down and retest this zone. That'd be perfect. If it doesn't, what you're then looking for is this: a clear break above. This previous resistance becomes the new support. Bang, bang, and away you go. You could enter buys here, okay? You want to see Canada really shit. If oil comes in strong, it will pull this down. Then you'll get news later that the Chinese news is very strong. It will then reject here and it will then start to push up, okay? But overall, both economies are really shit, okay? So I wouldn't be taking this trade, hence I've turned it off, okay? So from doing the fundamentals, this is the last part, guys. From doing the fundamentals, you work out which economies / currencies are strong, pound, USD, which are weak, NZD, AUD, CAD, Euro, which are neutral. Fuck them off, okay? You could put GPY there, like I said, if you want. Then you write down below here, buys, sells. You then look, what's a strong economy? GBP, 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 GBP. Okay. What's a weak economy within this? Okay. NZD, AUD, CAD. Okay. So you now know you're fucking looking for buys only in GBP, NZD, GBP, AUD, GBP, CAD, right? USD, USD, CAD, right? You're looking for buys only. Now, of course, when you look at the market right now, like I've just physically shown you, you are going to see the opposite of that happening. Do not get confused. I think, well, he's full of shit. He said that was, that was buys. That's clearly dropping just now, so that should be sells. No, that's not the real trade. That is the counter trend, pullback. That's just the banks, taking profits, which is then making the market come down. They're not entering sells; they're just simply taking profits. Once it gets down to the areas of value, they will then add to their positions, i.e., lump into the pound. They're not going to put their money. They're not going to take the money from the British economy, which is offering 4.75% return on investment, to put it into NZD, which is showing 4.25. Who's going to do that? Nobody. Ask yourself right now, if you had a savings bank account, right, with a bank which was offering you 4.75%, a year, a month, whatever, and you had another bank approach you and say, "Hi, we know that you've got savings. We heard you've got 100K in here. Do you know that if you come to us, we'll give you 4.25%, per month?" What are you going to say to them? "Oh, I'll gladly come." Or are you going to say to them, "Why the fuck would I come to you for 4.25% a month? I'm already getting 4.75 a month. Why would I come to you for less money?" It's no different. So then you're not going to enter pound NZD sells. You're going to be entering pound NZD buys. All right, guys. I hope I've explained it enough. This is quite a long video, but yeah, I hope you gained a lot of knowledge from this, all right? Because I'm not bullshitting you. This is how the markets fucking work. Yeah. On the trading, guys, this is the last month we are offering a free month in the Discord channel. After December into the new year, we are no longer offering a free month, guys, because we just get loads of mad, weird Indian dudes jumping in, and then after a month, because they're tight bastards, they will change their email address to their wife's name, fucking Shaloptra, whatever, and they'll try and get another free month. Then a month later, they'll fucking put in their kids that isn't even born yet, fake email address, and try and get another free month. So after this month, we are fucking off the free month trial. If you want to try the free month, you may as well jump on right now. After December, we are no longer doing it because Indians are fucking annoying us. So that's why we're not doing it. No offense if you're Indian. But if you are Indian, you know exactly what I'm talking about, right? You motherfuckers are annoying. Not all of you, but yeah, in general, you do a lot of sneaky shit. So yes, guys, come across to the trading guys. The links and details are below. I don't know why this is happening, but see the links below where I'm giving you guys a lot of like free stuff, like my trading rules. There's another couple of free things down there, like PDFs. I can't remember. Oh yeah, when I typed out the meanings between what do you call it, CPI, PPI, blah blah blah, the guide, right, the fundamental guide. I don't know why the links aren't working. It's quite frustrating because every time I touch it, it works. Hopefully it works this time, guys. If it doesn't, please leave me a comment in the comment section and I'll send you another link, okay? But yeah, I'm Ryan Mack. This is Trading, guys. Thank you very much for watching. I hope you learned a lot. If you want to come and join us for our last 3-month trial, jump across now. In January the 12th, I am going to be doing a 4-week trading masterclass. Not every single day during the 4 weeks, but one day per week over the course of 4 weeks. So it's going to be every single Sunday. Okay, it's going to be 8 p.m. my time. That's going to be what, 1 p.m. UK time, I believe. I'm going to be doing live masterclasses. I'm going to teach you guys every single phase of trading. I'm going to literally cover it as if you are a baby in the beginning, right? What is a lot? What is a pip? what is a spread. We're going to cover risk management. I'm going to teach you the fundamentals. I'm going to teach you supply and demand. How do you know? How the hell did you know, Ryan, to put that fucking box there? How do I know when to enter the market, Ryan? Because I can see it coming down to my areas, but I always shit my pants and I don't know when to enter. You know, I'm going to teach you this. And then by the time we get to week 4, I'm going to show you how to piece every single piece of this together so that you can go off and you can go and trade by yourself. Okay. That course, I'm going to do it every 8 weeks. The first one is the 12th of January it starts. I'm only going to have it for 10 people each time. This first course is going to be £159 sterling because it's after Christmas. I know a lot of you don't have much money, blah, blah, blah. So I'm going to do you a massive Christmas deal, okay? After that, when I do it, it's going to be £359 per course after that, okay? So, yeah, let me know your interest below and I'll jump in. Have a great weekend, guys. Much love.